Morning, traders, and welcome to the Bookmap live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Give me just a second to make sure we're live streaming here, and then we will get this bad boy going. Yes, we are. All right. Welcome, welcome. If you have not yet, please smash that thumbs up. Please say hello in the chat. If you're watching in the Discord, there is a tab called Futures Charles. You can leave your questions there, and I will get to them as soon as I can. All right. Well, first things first this morning, what is important? The most important thing, probably the contract rollover. For those of you that don't know, this is the contract rollover week. So basically, you have throughout this week to stop trading the Z contract and start trading the U contract. Okay. So it'll last all week long. Everybody kind of has a different approach to how they handle contract rollovers. Some people like to look for which contract has the most liquidity and just be in whichever contract that is. Some people like to continue to trade in one contract until Friday, and then they flip on that very last day. For me, I flip on the first day of the contract rollover, which is today. So from this day forward, I will be trading the U contract for next year. So that's U5, if you're wondering which contract it is. Or sorry, H, not U. My bad. H5 is the contract that I'll be trading. And that's what I'll be discussing. Those are the levels I'll be referencing. And the reason that I do that is simply because my software the data feed automatically rolls over on that first day of rollover. So I just trade whatever I'm seeing on my chart. And that brings me to the next point that I wanted to talk about when it comes to contract rollovers and how people trade them. The week of a contract rollover can be very confusing. Because everyone's kind of looking at slightly different things. Even though the market tick for tick is moving exactly the same, depending on which contract you're on, if the market goes up a point, they both go up a point, the number is different. And then the references to the left are different. So for example, right now on the H contract, we are now at new all-time highs and we have this massive, huge gap up. Whereas on the previous contract, we're still in balance and the market is just still inside yesterday's range and nothing exciting has happened. So that's very different things. A massive gap up versus being inside the previous day's range, inside a balance area, those lead to completely different market behaviors. And so it can be kind of confusing to be like, well, wait a second, how should I be looking at the market? Should I be seeing it as breaking out or should I be seeing it as imbalance? What should I do with this? Well, in my experience, it is always best to just trade the new contract as if it is the only thing that exists, as if we have had a massive gap up and we do have momentum. Okay. The last time we had a contract rollover, this exact same scenario happened where we had a huge gap. Well, the last 5 contract rollovers, we've had huge gaps up. None of them have filled the gap that day. I think only one of them ever ended up filling the gap. And that was weeks later. Okay. So I'm going to treat this like a gap. I am going to look for a gap and go because that is historically what happens when we have these massive gaps. But the last one, we had this exact same scenario where the market was in balance at all-time highs. The contract rolled over. We made a new all-time high in the new contract, and everyone in the chat was arguing with me that I was wrong, looking at it as a gap and go, and it turned out I was 100% right, and the market kept that momentum going for days afterward, and the market acted like it was at new all-time highs. Okay? So today, this morning, that is exactly how I'm going to look at this market. Even though technically, I can show you here if we look at this chart, the old contract. Give me 1 second. Doobie-doo, waiting for my drawing tool. Okay. While technically the previous contract is still in balance, and we would see this as very neutral and be thinking it could go up or down from here, the fact that the new contract has broken out of that balance with this massive gap up, guess what I'm going to be seeing the market as this morning? As a massive gap. Okay. So I'm going to be saying there's been some kind of huge change in the market. And I'm going to assume as long as they can keep the momentum going, that change will continue. And so the momentum today can continue. It'll be a little bit confusing when we talk about different price levels. It'll be a little bit confusing when we're talking about liquidity, particularly today, because there will be more liquidity in the old contract today. So I'll be switching back and forth on Bookmap to watch the order flow on the old contract to see what's happening there, and then clicking over to see what's happening on the new contract. And it's a little bit confusing. It is what it is. It happens a couple of times a year. It's not a big deal. And we just deal with it, that it's confusing. Okay. To add to all the fun of a contract rollover this week and a gap up and so on and so forth, we also have FOMC. We also have Santa Claus rally begins today. Okay. So there's a lot of things influencing the market this week that will make it a little bit crazier than normal, a little bit, more chaotic, a little bit more uncertain. And so this brings me to the philosophy I wanted to discuss this morning. My way of approaching trading is that I simply trade whatever is happening in the chart in front of me. I don't overthink it. I don't go, well, what about this? And what about that? And what about fundamentals? And what about if, Powell comes out super hawkish or like whatever? I don't think about it like that, right? All I think about is what is happening right now in the chart in front of me. So as far as I'm concerned, because I am trading the H contract, as far as I'm concerned, we have a gap up, and we are looking for continuation of that momentum or a failure of that momentum. If the market starts to fail, if we start to pull down into the overnight range, and in particular get below the overnight low, I will use the old levels from the previous contract the same way I would if we had not rolled over. And again, I know that's confusing. I know that drives people crazy. But as far as I'm concerned, the levels that were made in a contract are the levels that matter forever, no matter how many times the contract changes in the future and how the fluctuations happen with the rolling over of the contracts. So this morning, I am basically going to be bullish anywhere inside this overnight range. My assumption is we will find support and we will turn around and we will head higher. If we get below the overnight low, so if we get below 61.22, I will be looking for a pullback to get to first the previous all-time high, which is 61.11. If we don't get a bounce there, I'll be looking to test the high from the 11th at 61.02, and then down towards a gap fill. Although I really don't think we'll get a gap fill. That would be an insane sell-off for a day. That would take like a massive piece of bearish news to do that. Okay, so I know that drives people crazy. I know they don't like it. They want to argue with me, but this is how I do it, and it works. And if ever it stopped working, I would change the way I look at things. But I have always found when there is a contract rollover, you just trade the new contract and you ignore everything else. Okay? So that is that. So as far as I'm concerned this morning, both ES and NQ are at new all-time highs, and both of these markets have a massive gap up. The gap up is a sign of momentum. The new all-time highs are a sign of momentum, and there's no reason in the world to think that momentum can't continue today. So the area that I will be looking at for major support on the NQ is going to be around 22,100. Okay, you can see this very large node where there was a lot of tug of war in the overnight. That is the area I will be looking for support. I'm basically bullish anywhere above there. Okay, it can come down, it can test it, and I would still remain bullish. It can push above the overnight high and find support, and I would be bullish for a gap and go. Okay, if we start to get below this big node, then I'm more neutral and I need to wait for more information. Okay, and for the ES, that level is going to be same exact conceptual idea. That level is going to be around 61.30. So again, I am bullish this morning, plain and simple, above 61.30. That doesn't mean it can't come down. It doesn't mean it can't grind and grind and grind and grind and grind into here. But as long as we stay above it, my assumption is we're going higher today. Why? Because of the gap up, because of the new all-time highs. Okay. If you don't agree with me and you want to fight that momentum because we're still in balance on the old contract, I would not hold it against you. This is how I do it. It works for me. I'm going to do it like that. Anyway, so are there any questions on that or anything else from the chat? any questions for the pirate. I'm going to go through and delete some of my old levels here because, again, I'm treating this like it was a massive gap up. So now none of these weak references matter at all. There we go. That's what she looks like. Ramp, 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 ramp. Ramp, 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 ramp. Let's jump in the chat and find out what you guys are asking about this morning. If you have any questions, let me know. Good morning to Dan. Pellegrino, good morning to you. Jay is in the house. He says, good morning, Charles and Pirates. What a great day in the big casino in trading Paradise. I concur. Good morning to Will. Pellegrino says, can you please add the link to subscribe and the cost? So I can't because this is a Bookmap stream. I can't control it. But basically, sorry, I got somebody walking around in my backyard. This is weird. Anyway, I can't deal with it right now. Sorry. So to subscribe to the brigade, you want to head to Piratetraders.io. You'll find a link if you just scroll down a little bit there, or you can go to Piratetraders /join. Piratetraders.io/join. You can join the brigade there. There's a link written up at the top of the screen. That's $10 a month. And you can, listen to me do these live streams every single day. Ask me all the questions that you'd like. Or I'm also teaching a workshop, which you can find by going to marketsandmind.com. Markets plural and mind.com. That is coming up next month. I only do a couple of them a year. And so if you are interested in learning how to trade the way I do, learning how to read markets, learning how to manage risk, how to develop trade setups, and how to be a profitable trader, all the things you have to do, you'd want to head to marketsandmind.com, scroll on down, and then click on this little thing right here. It'll take you to the sign up. You can use promo code Bookmap when you check out to save an extra 10%. Okay. So if you are interested in doing that, you might consider heading over there today and signing up. The early bird special, which makes this a little bit cheaper, is only going on until the end of this week. So this is your last week to get that discount. After that, the base cost will be $450. So you want to sign up this week if you are thinking about doing this. If you're thinking $450 is too much money to pay, Charles, I can't risk it. What if this is a waste of money? I guarantee you this is not a waste of money. The $400 that you invest in your education will come back to you tenfold in your trading, either by protecting you from losing $400 in the future or helping you make $400 in the future. So if you are considering, stepping up your game, I highly recommend the workshop. Okay. Danny G is in the house. Good morning to you. Stephen W is here. RK. He says, Contango, tango, what's your slango? I don't know what any of that means. I hope I didn't just curse myself by repeating it out loud. But welcome, RK. Laura is here. Good morning to you. Billy K in the house. Trevor is here. Welcome, welcome. Griff is here. Mr. Ree with us. Good morning to you. Been a while, Mr. Ree. Hope all is well. Andrea, good morning to you. Debbie B in the house. Red Pole is here. Shashank, good morning to you. Ross is here. Infornity, could you remind me on how Jim sees single prints in the overnight? I'll be totally honest with you. I took classes with Jim Dalton in like 2020. So I don't remember specifically how he sees single prints in the overnight. I can tell you how I see them, which is I don't really give them much credence one way or another. So what does that mean? When the regular trading hours opens, I don't assume we have to backfill single prints from the overnight. I don't assume that they will be support or resistance levels. It's more of one of those things where if we got to a base of single prints from the overnight and we got support or resistance, like afterward, I would recognize it and be like, okay, we held at the base of the singles. That's a sign we still have momentum. Now let me start looking for a long. I wouldn't be like putting in a limit long right at a base of singles from the overnight. Anytime you see single prints, it is just a sign of momentum, right? That's all it is. It's just a sign that the market just had momentum and it was going so fast that it only spent less than 30 minutes in a particular range. That always means the same thing. Momentum is momentum, right? I just give a lot more credence to momentum created in the regular trading hours than I do in the overnight. Okay. It is just much more reliable in my opinion. Riverrock says, why would you go back and forth from the Z to the H and not just stay on the H just for today, Riverrock, just with order flow? So merely with Bookmap and where I'm trying to see liquidity in the order books and how that liquidity is changing, because right now, I think I actually have the thing open right now. Yeah. So if we look at the two contracts, you can actually see that there's more liquidity at the moment. It's just a little bit more, but there's more liquidity in the old contract, in the December contract, than there is in the March, right? So if I'm trying to look at liquidity and figure out what the market is doing based on liquidity, I got to look at both contracts, right? Because there's liquidity in both contracts. So I need to see what's happening in both and how things are changing to give me insights to carry forward. But everything price action wise, I will just be in the new contract, right? I won't be looking at the old. And as always, the market internals never change because they don't roll over. So I'll be assuming, as I said, that we're going to find support in here around 61.28. I'll be assuming if we get that support, we're going to get above the overnight high. And I'll be assuming if we get new buying above that overnight high, the market will continue higher. And it doesn't really matter which contract you're trading. It's the same conceptual idea. Support inside the overnight range increases the odds of the test of the high. Support at the high increases the odds of momentum higher. So when I'm at those levels and I'm wondering what's happening, I'll be looking at the Bookmap and kind of switching between to see is the same thing happening in both contracts, essentially. So for example, right now at 60.85 on the December contract, we have this huge note of liquidity, right? It is not there on the March contract, right? So I want to be aware of that. I don't want to, not know that that is a target to the upside, right? If the market is able to get above the overnight high, that's a target. A move, we'll call it 8 points above the overnight high. Stuff like that, right? And if they keep adding liquidity there, if they keep piling it in, it might start to scare price away. Buyers might start to think, oh, fuck, if we're only going to get 8 points, I don't need to go long. And so that might start to scare price away. And then I want to know so that I can, as the market is pushing away, I recognize what's happening. But that will honestly be just for today. By tomorrow, most of the liquidity will be in the new contract. It's generally mostly rolled over by Tuesday. And I don't know if I mentioned it, but there is also an FOMC this week. So generally, the market is a little more cautious the week of an FOMC. We have a lot more balance leading up to it, Monday and Tuesday, because we have the minutes coming out on Wednesday and also Powell is speaking. So that's like a highly volatile event. So sometimes you get kind of compressed rotational markets leading up to it, but I don't care. I'm still going to treat it like a gap up. I'm going to treat it like momentum. And if we get balance, I will recognize that as it's happening. Good morning to John George. Welcome. Grizzly Bull, welcome, welcome. Arjit is here. Momo says, so you wait for the rollover safe? Laugh out loud. I don't know what that means. But again, I will just tell you guys, the last 5 rollovers that we've had a massive gap up like this. All of them, every single one, the market had a gap and go and it just kept going higher that day. So that's not a guarantee we're going to get a gap and go today, but it is a reason to treat it like a gap because it has worked like magic the last 5 times. So one should assume whatever mechanism is at play will be at play again today. Good morning to Grizzly Bull, Arjit, and Nap. John says, Pappy? Yeah, Pappy on Wednesday. Pappy on Wednesday. Casey, hello to you. Good morning to Casey. Steve, good day. Good day, Steve. All right, guys, we got 2 minutes. 2 minutes to market open. So once again, just to repeat everything I've said, because there are people that are piling in right now. If you are piling in right now, welcome. Smash that thumbs up button, please. And just to let you guys know, I am seeing this as momentum this morning, the contract rollover. I am assuming that momentum is going to continue. I am bullish today. I think we're going to test that overnight high, and then we'll see. I don't know how much further we can go, but I think we're going to test that overnight high. So I will be looking for support inside the overnight range, which I am calling basically between 61.49 and 61.21. That is our overnight range. And as long as we're inside there, my assumption is we're going to head higher. The major support level that I am watching is this area right here around, we'll call it between 61.28 and 61.33. That area right there is the most likely area to hold as support for a bigger move if we are going to get a gap and go. So that is my main focus this morning. If we get momentum, I will go with that momentum. I will not be fighting it. Okay. We're at all-time highs. We're trading the new contract. We are at all-time highs and we have a gap up, and both of those things often lead to more buying. They lead to short covering from traders who've been short, and they lead to FOMO buying from traders that are flat and want to get into trades. So I am looking for momentum this morning, and I am feeling bullish. And until we get below this node, I'm going to remain so. It is also worth noting, this is contradictory to what I just said, which is that I believe in momentum. I believe we're going to have momentum this morning. The contradictory argument would be we have FOMC on Wednesday. And so we often have balance before FOMC. So we'll take it one tick at a time and see, but I am feeling bullish for now. All right. Well, we immediately, within 2 seconds, headed up to test that overnight high. That makes the current high weak and increases the odds we will come back for it later on at some point. So because we're at all-time highs on this new contract, all I have to look at for support levels is the overnight range. So there is a potential support right here around 61.40. We might look for a bounce there. If that doesn't hold, then we probably do need to come back down to this larger node I was talking about. So this is a giant question mark whether 61.40 will hold. I would not put a limit long in there quite yet, but I will be watching it and monitoring if we get a bounce. Alois says, I'm not sure why you're talking about an all-time high. The March contract is at 61.81.25. Again, so it's very confusing, I know, but just hear me out. This is the way I see it. So I trade the chart of whatever contract is happening at the time it's happening. So everything before today, I'm using the levels from the old contract. And then starting today, I'm using the levels from the new contract. Okay. So yes, if I was just looking at the H contract, we're not at all-time highs. We're in balance, exactly the same as we are if we hadn't have rolled over on the Z contract, right? But I have just found that that doesn't work as well as looking at it the way I'm talking about, which is like I say, we were trading at these levels before when we were trading in that contract. Now we're trading at this level. And this exact same thing happened the last time where we made a new all-time high, air quotes, and everybody was like, but the SPX isn't at a new all-time high. But the other contracts aren't at a new all-time high. The SPY isn't at an all-time high. And they argued with me about it. But what did the market do? It just kept going and going and going. And it had that all-time high type of momentum. And that is what I'm expecting here today. So I know it's confusing. It's just I have my own way of looking at contract rollovers. I've never heard anyone else talk about it like this. But I'm telling you, for years I've been doing this. For years, people have been arguing with me on it. And for years, I've always been right. That when you roll over to the new contract, you treat the levels of that new contract as your levels, and you keep the old levels from the old contract. It's annoying, but it just works best in my experience. And I say all-time high on purpose, right? I use that phrase because the market behaves differently at all-time highs than it does when it's in a range, right? When it's at all-time highs, you're forcing shorts to cover and you're bringing in new buyers. You have momentum, and that momentum exists purely because you're at all-time highs. So that's the way I see it. But we'll take it one tick at a time. Right now, we're back below the opening price. We're looking for a pullback. So on the new contract, that'll be my first target is 61.40. We'll look for a bounce there. If we don't get it, then we're looking to test the 61.30 area and looking for a bounce there. Okay. We also left behind a weak high this morning. Doesn't matter which contract you were trading. That is a weak high, which is a target to retest later on once we find support. So just put yourself in a hypothetical scenario where you imagine somebody shorting in here. The market comes down, it finds support, and it comes back through. What are they going to do? Cover. And all of a sudden we have momentum. So that is how I'm seeing it until I see otherwise. Can anybody tell me what the last contract rollover was? What the dates were for it? Can you guys remind me when we got to the Z? Hello, chat, my old friends. Someone research for me, please. Trader in the Bookmap Discord says, "Good morning, Charles and traders. Trade what you see, not what you think." I concur. So it was 9 through 16. What month? Maybe it's on CME. Ah, it is. Okay. So, yeah, 920, 916 through 920. Mm-hmm. Yeah. So, TradingView rolls it over the second day. So TradingView didn't show it until the Tuesday, but this was the last time this happened. So we were like here on the Monday, and I was saying like, you know, momentum, new all-time highs, and look what the market did. It just went up. It never came back down to fill that gap. That is common, and that is why I bring it up. Okay, so what do I make of what we're seeing so far? We found support. We passed back up through the opening price. So that means now we're starting to squeeze sellers. Okay. Increases the odds. We are going to repair the week high up here at 61.49. Again, on the new contract, 61.49. But this is not good taper on the low. Okay. So that tells me we're not done going sideways yet. Increasing the odds in my mind, we will actually get a look above and fail of the overnight high and not necessarily make a huge move first thing this morning. So I'll be very cautious at the overnight high. I'll be looking for taper in volume and price. And then if that can't become support, then I'll be looking for it to pull back down through the open, because it seems to me it needs to spend some time chopping this morning. A little chop as we have bad taper on the low and a weak high. Yeah, this is a very exact low. The bots are buying. Okay, so Bookmap is going dark here. We can see the liquidity disappearing. You can see we had all this liquidity in here, and now it's just gone. Poof. And so that tells us we got some news coming out. Some information is going to be dropped at 9:45. And so the day trading bots are turning off to give the news bots a chance to turn on and react to that news. We will likely get some very volatile moves for a few minutes. And then once the liquidity comes back, then we can start to look for support or resistance. So here comes that news liquidity right at the strike of 9:45. And you say to me, you say, Charles, is there a way, if we can predict there's going to be volatility because of the news, is there a way we can predict which way it's going to go, whether it's going to go up or down? No, that part is random. So generally speaking, if you're in a trade and all of a sudden you see Bookmap go dark, you might say to yourself, how do I want to handle this? Do I want to just take profits here? Do I want to move my stop above my entry? Do I want to just wait and see? How do I want to handle that? Because the reaction to the news can be totally random. You can have good news and the market can crash. You can have bad news and the market can go up. It doesn't matter. So you got to kind of just wait for that news to work itself out. And then you can start to trust support or resistance levels carrying it forward. So right now it looks like a nothing burger. Knapp says it's PMI. And Jay says they forecast 55.8 and what they got was 58.5. So there you go. But no reaction to it whatsoever. Interesting. Yeah, so services came in higher than expected, but manufacturing came in lower than expected. Hence the nothing burger. Okay, so we're testing the first potential support here around 40.41. Do we get a bounce? Do we get back up through the opening price? If we do, I would expect a move to the current high. If not, that will lead to more selling. So that will be kind of short term, a little bearish. If we can't hold the support here, but we'll have to wait and see. It's a little choppy. Momo says gaps are weird. No point today. Yeah, it's the gap is the contract rollover. So the contracts, I've never had anybody explain to me why this is, but contracts the new contract always tends to trade like 10 to 20 points higher than the previous contract. And so it's like when you roll over to that new contract, you instantly get a change. And so like the chart I'm looking at right now is a continuous contract. And this one just chooses to roll over on that first day, Whereas, like, for example, TradingView's continuous contract rollovers on the second day. And so there tends to be a lot of confusion for these first few days with traders. So yeah, hence my explanation this morning of how I look at it. We got 126 people hanging out. Welcome one, welcome all. If you guys have any questions, if you're confused about what I'm talking about or what you're seeing on the chart, please feel free to jump in the chat and let me know. We are making this live stream together. You guys are part of it too. Also, if you have not given a thumbs up, I mean, why not? It's just it's a little button. It's a little push. And suddenly I feel liked. I feel appreciated. Lawrence, hi to you. Welcome. John George says, why not? Indeed. I agree, John George. Why not just push the thumbs up and see? It might be good luck. Like, you might have an amazing day of trading if you had just pushed the like button in the live stream. I'm not guaranteed. That's not a guarantee. Okay. But I'm just saying it could happen. Why not try? Anthony says, no, thank you. Oh, NQ. Ooh, Anthony, I thought we were going to have to fight. He says, NQ, please. Yeah, let's take a look at the Q. Again, I kind of put the Q in the exact same category as the ES bigger picture. I'm seeing it, again, don't get mad at me for saying this, but I'm seeing it as being at all-time highs. I'm seeing it as a gap up, gap and go. All of that is a sign of momentum. All of that is bullish. Okay. So it's exactly the same as the ES right now in the terms of it's got a very kind of weak low. So the ES has what we call low volume low, and the NQ has what we call a weak low. But what is different about the NQ is they are now above the overnight high, which again, I'm on the newer contract. I have as 22, we'll call it 210. Okay. 210. And so that's the area you're looking for them to hold as support. As long as they continue to hold this overnight high, as long as they keep bouncing when they come in there, the higher probability is that the market is going to keep going up. That would be bullish to see, holding that overnight high. However, a word of caution, which is that if the market comes back through the opening price now, if the market comes back through 22,200, then you'd probably be looking for a bit of a pullback because everyone is long, right? Everyone is buying and buying and buying and buying. So if the market comes back through that opening price now, you could get a bit of a drop. So, there's a trade to be taken, putting like a limit sell a stop sell order down here at the opening price if the move comes back through, but you definitely don't want to be shorting up here at the highs because this thing has momentum and it could shock you how far they push it when they have the momentum. So I am bullish on the Q, but they need to hold this overnight high in order to keep that momentum going. Frito says, push it. Push it real good. Down, 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 down. Just push the like button. Down, 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 down. Real good. LP says, yeah, I'm still confused on the contract rollover. Let me see if I can just get both of them side by side so you can see. I can do it on TradingView. Okay, so this right here is the older contract. Okay, so if I were to change to the H. So you see how there's all these different letters and numbers here? The old contract is ESZ 2024. So that's the December 2024 contract. Okay. That contract is over at the end of this week. The last day that you can trade that contract is Friday. Come next Monday, you're not allowed anymore. They shut it down. So you have 1 week, basically this week, to take any positions you have in this futures contract and roll them over into the next one, right? So let's say you're long, whatever. You're a swing trader, you're long, you think the market's going to keep going higher. You have to close your long on the December contract this week and get into the March contract, which is the next one. So then for the next 3 months, we trade on that contract, right? And then when we get to March, we switch to the June and so on and so forth, right? Every quarter they switch out to a new contract. But the tricky part is these contracts, they are not at the same price level. I know it's very weird. It's like they move together. So they both go up 1 point exactly the same time. They both go down 1 point exactly the same time because there's arbitrage keeping them locked in sync. But the price level isn't the same. So if we're on the Z contract right now, we're at 6,073. If we switch to the 8, we're at 61, or 61.45. But if you physically look at the chart, they're exactly the same, right? The candles are exactly the same, but the price level is different, right? And so during this week, right now, it's tricky because we're all switching. We're switching from the old price levels to the new price levels. And so everybody's looking at different things and, having different opinions based on those things. So it's just part of it. It happens 4 times a year. It's no big deal. As I've said, this is how I deal with it. I just trade the new contract as if starting from today, it's those levels, and I keep all the old levels. So some people, what they'll do is they'll say, okay, the all-time high on the previous contract, the all-time high was 61.10, right? That was the old all-time high. So to me now on the new contract, the all-time high is 61.78, right? But I don't see it that way. I see that old contract as being the previous all-time high, and what the market is doing now as being a new all-time high. And it drives people nuts, and they hate me for it, but it works. I'm telling you, it works like a charm. And I think it works because of computers. Nor Auto Trading says, what typically happens when a rollover to a new contract occurs during swing trading? You have to get out of the old. So if you have options that are on the old contract, you have to close those out by Friday, or they expire Friday. Like you can't have contracts beyond that. Or if you have a futures contract that you're holding on to, you have to close it out by Friday and open one in the new. So LP says, so are these new highs legit or just the rollover? They are just the rollover. But again, yes, they're just because of the rollover, but the last 5 rollovers we've kept going. By the moment, it's acted like it was a real gap. So if it's been acting like a real gap every time, why not just treat it like a real gap? You know what I'm saying? And the way you treat a real gap is if you don't fill it, you're going. You know, you're going to keep going in the direction of the gap. So if we don't come back down for yesterday's high today, we're probably going to keep going up, you know? All right. There's the repair of the week high. So now the ES is in the same position as the NQ. Okay, we talked about the NQ. They are bullish as long as they can stay above the overnight high. The same thing is now true of the ES. As long as we stay above the overnight high, we should assume the market is going to continue higher today. If it looks above and fails and pulls back through, that could lead to a bigger pullback because a majority of participants are now long. So they got to keep bringing in more longs or they could all get squeezed and we get a pullback. So now the opening price has become, the opening price for both markets has become very important. They do not want to cross back through that open or they squeeze the buyers. But until that happens, bullish. Bow, 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 bow. RK says by the end of the week, SPX will slowly converge. And there will be a 10-point spread, give or take. Yeah, that's SPX to ES. That's a whole nother conversation. That doesn't make any sense to me. Why the SPX is always like 10 points off from the ES. But whatever. Yep, that too. Okay, so I'm looking at the new contract, the H contract. I'm looking at it through the TraderMap Pro software, which basically just filters out the, the bots. It filters out the bracket bots that drive us nuts. And so what I'm asking myself now is, can we flip the order books? What does that mean? We had sellers piled in here around the overnight high, right? And they were waiting to get short and waiting to get short and waiting to get short. But then when price came up to it, they just blew right through. Let me change the color and make it easier to see. So they were in here and then they blew right through. So now the question is, can we flip the order book? Can we take what was resistance and turn it into support? So I'm now looking to see, do we start to stack in liquidity around 6150, right? Does that start to become support? If not, it increases the odds of a look above and fail. If so, it increases the odds of momentum to the upside continuing. Let's see what happens. Okay, so we did not flip the order book, and we are now back inside the overnight range. So as I said, the last real potential support is this area right here above the opening price. Okay, so we'll say anything above 61.44. So between 46 and 44, that is our last potential support. As long as the buyers hold this, there's no reason this market can't just keep going up all day, right? Because them holding it means they still have momentum. They're bringing in more buyers. Now, Bookmap is saying we haven't brought in those buyers yet. We haven't flipped that order book. So that's less bullish to see. But there's always a chance they can hold it. If they can hold it, I'm bullish for momentum to the upside, for the market to continue higher. If they cannot hold it, and they fail and they come back through the opening price, so coming back through 61.44, I would look for a move down towards 61.30. Okay? Because like I said, you're going to squeeze all the buyers. So right now the buyers are in control. And as long as they stay in control, fantastic. They'll just keep going higher and higher and higher. But if they lose control, then you get that liquidation and you get that pullback in price. Right now, to me, it feels like we're going to keep going. But I could change my mind at any moment if they cannot hold that support around 61.45. Okay. Unfortunately, I have to say goodbye to the people that are just hanging out in the Bookmap room. I have a private room where I live stream every single day. It is called the Piratetraders Brigade. You can see a link at the top of the screen, piratetraders.io/join. It's just $10. Sign up, come hang out. We'd love to have you. And that's where I'm going now. So if you are a member of the brigade, head on over to the private stream. I will see you there in about 2 minutes. And if you are not, happy trading. Remember, it's going to be a choppy week, right? We have contract rollover, which is going to make things tricky. We also have FOMC on Wednesday. This is an FOMC where at 2:30, Powell is going to come out and speak. So come Wednesday at 2:30, it's going to be crazy. So prepare yourselves for that. Keep that in mind as we lead up to it, that we have a higher odds of sort of a choppy sideways market. And then when that event happens, we'll see what comes next. Okay. Thank you guys very, very much. I will be streaming next Monday on Christmas Eve. So if you want to come back and hang out, we'd love to have you right here on the Bookmap channel. Thank you very much. Have a great rest of your day, everyone. Bye. Bye-bye.